Perhaps you could comment on that last comment by Mike Novogratz. The worst has happened, has it? Or are there some macro headwinds that we should be cautious of coming ahead?
For crypto, I think it has. I mean, I called it early. I was in at 30K on this cycle, which I'm ashamed of. You know, it went another 10K down. But that gap's closing today, so that's good. But for bigger picture for markets, for bonds and equities, you know, I think there's much worse to come. And I've been in this game 25 years, and you know, we are at lofty equity and bond valuations on a historic basis. And the inflation doesn't look like it wants to go away. I mean, I think that some people are hoping it's going to go away, but I just don't see it. There are so many structural challenges. And I think that crypto is going to come to the fore in this cycle. That's the exciting bit for me. You know, finally it can break away from this correlation with tech stocks and do its own thing. And so if crypto can succeed, whilst the equity and bond markets kind of not necessarily suffer, but go nowhere for years, you know, I think that's where we are, and crypto is a solution from a problem.
What do you think is driving today's bounce? I mean, I'm looking at U.S. stocks right now, and they're up, and it almost seems that, you know, Bitcoin and other cryptocurrencies are just following behind. Or is it because of ETH? You know, or is ETH driving the market? They initially, ETH was the one to initiate a huge bounce amid the ETH merge coming up later this year.
Well, maybe one day ETH will drive world markets, but I think today ETH doesn't even drive Bitcoin. ETH is ETH, and it's a great thing, but you know, but I think that's hopeful. I think what's happened in the last couple of days since Friday, we've seen a little bit higher inflation expectations. That tells you that the worst of some kind of deflationary slump is not going to happen in the short term. But bigger than that is the 2 and a bit percent softening in the US dollar. Now, being in America, you probably even notice your dollar because it's 1-to-1 all the time where you live. But elsewhere in the world, we really notice it. And when it goes up, that can be very painful. The US dollar is basically in the top 2 percentile of its sort of overboughtness on a 50-year perspective. So, you know, that has been a real squeeze, particularly on emerging markets. It's been a squeeze on Europe, but it's been a real squeeze on emerging markets. So for the dollar to come down 2%, that is fantastic news for risk assets. And Bitcoin, as always, is in the front.
Certainly, we saw that 1-to-1 US dollar to euro parity happening. And I wonder what that impact is on the Bitcoin markets for European traders.
I don't think it makes much difference, really, because you're dealing with an FX pair, you know, euro dollar or GBP dollar, something like that. You know, less than 10% volatility. Bitcoin is, you know, in the short term can be really high, but basically over the last year, we're talking 58% volatility. So, you know, Bitcoin is 5 or 6 times more volatile than a typical developed FX pair. So I kind of think from a trader's perspective, they don't really acknowledge that. You know, in the gold market or in the bond market, that would be a big deal. But in crypto, you know, 8%, who cares? So, you know, we're dealing with bigger volatility, bigger picture here. So I don't think it makes much difference.
As an asset manager, I'm wondering if you can gauge the sentiment from institutional investors out there. Are they willing to buy, or are volumes low, or are they holding back?
Well, there's 2 types of institutions, let me tell you. There's one that accepts Bitcoin, crypto, and is here, and they're quite excited, I think. They're disappointed with what's happened in recent times. You know, a lot of big failures that have dragged the market down, a lot of liquidations. They're dying to get back in. But, you know, that's the minority. The 99% of institutions are not involved. And I'm talking about the big firms, the pension funds and so forth. They really are not involved in the way that we wish they would be. But they will be in the next 5-10 years, and that's an exciting journey. Those guys, I think they've gone from saying that crypto is a Ponzi scheme to accepting that it's here to stay, but they still don't know what it is and they still don't understand it. But they are coming. Give them time. You've got to feel sorry for these people.
All right. Do you see any trends or interesting data in your perspective on price movements for Bitcoin?
Sure. We've had a pickup in network activity in the last week or so, we should expect after a capitulative sell-off. But I think that more importantly, this is the first Bitcoin cycle. You know, let's call it a bear market. I mean, the price is down a lot over the last year. It's the first Bitcoin bear market where where the network, the underlying transaction value in US dollar terms, really hasn't been very volatile at all. You know, in 2014 and 18, when we had these savage 90% plus fall in the Bitcoin price, you know, we saw a massive drop off in on-chain volume. This cycle we haven't. This cycle it's been really, really stable. And so I think the problem in 2021 wasn't the fact that Bitcoin was in trouble or the crypto ecosystem was in trouble. It's just a matter of prices too high. You know, crypto was in the everything bubble along with the stock market, along with the bond market. I mean, you couldn't escape it.
It's quite similar. I mean, in 2017, 2018, it went down about 85%. And here we're seeing, you know, just over 80%. It seems pretty similar.
Sorry, you mistook me. The price was similar, but I'm talking about the underlying network transaction values, the on-chain transactions have held up. And so the underlying network collapsed, the volumes collapsed, liquidity's dried up in 14 and 18. It hasn't happened this time. And we've got one indicator at ByteTree called the IDR, the Institutional Dominance Ratio, which looks at how much of the transaction of each block is dominated by, you know, big money. And basically, it continues to be, you know, the top quintile of traffic is over 99%. And whenever that happened, the network has stayed reasonably healthy. So, you know, I think we just have to accept that Bitcoin didn't deserve to be 68,000 last year. You know, it probably should never have got above 35 or something like that, or perhaps 40. And so, you know, we just, as I said, we just got caught up in the everything bubble. And you remember last February, 2021, you know, Elon Musk on Twitter and all that nonsense. You know, it's gone. We can go back to being a serious asset class. That will draw in the institutions, that will draw in the big money, and that will keep this
So do you see Bitcoin fair value around the $35,000 mark?
We've got some different methodologies. Our least generous methodology would put Bitcoin at 15K fair value. Our most generous would put it about 35. So, you know, that's based on an NVT, a network value transaction. And there are kind of some different inputs to that. You know, how many coins are there? Are there 19 million, or maybe there are 14 million if you look at active supply? You know, that's one of the things. What kind of smoothings you use and what time periods you use. So those are the range of possibilities. But, you know, it's not $1, it's not $1 million. It's within 20% of where we are.